Good morning, or good afternoon, sorry. Welcome to Trading the Close. My name is Lawton Ho.
Hello, my name is Drew Dosick.
And we are here to recap today's action in the markets. It's a pretty exciting day, right, Drew?
Yeah, we had the ADP jobs report number this morning. Came in a little bit weaker than expected. Then in the afternoon, we had Jerome Powell and the FOMC meeting minutes released from the December meeting. So markets reacted to it just slightly, but today, even though the markets are somewhat flat, there was a lot of big changes on the charts. And so let's jump into those. Let's go over the heat map and take a look at it. Follow me over here. You can see for the broader sense, the heat map is somewhat is in the middle ground. There's some stocks up, there's some stocks down, but a lot of cases it's flat. And then we can see over here too, on the Dow Jones is up just 0.32%. NASDAQ up 0.2 or down 0.2%. The S&P 500 is up just 0.11%. Oil is down just slightly, 1%. Then we have gold is up just slightly too. And Bitcoin has seen a pretty steep fall, down $2,000. And as I mentioned on this heat map, it's just all kind of showing just some red, some green, but there were some movers today that just really moved, particularly in the quantum computing sector. The head dog for NVIDIA came out and popped the momentum bubble on all those quantum computing stocks. Those saw a deep fall today, and we're going to take a look at one of those charts later in the show. But let's move on to some other charts so we can take a deep dive into this, Lawton.
Sure.
All right, so on the SPX, as I mentioned to you before, the S&P was basically flat today, but the main thing I wanted to point it out to you guys is that we had this upsloping parallel channel, and watch how the technicals work so perfectly. When we did break this upsloping parallel channel, we made another attempt to move higher, got trading within that parallel channel again, but then we came down. And usually when parallel channels are broken, the price is attracted to go back up into this area right here and retest itself. So right in this area, we are looking to go ahead and retest that parallel. It punctured through, price came down, and then went all the way back up and hit this perfectly right here on the parallel trend line before falling back down. It's just technical analysis. This is exactly how charts are supposed to play out and work. And so it's neat to see that happen right there on the charts. And on the next chart, we have the S&P 500 ETF. It's the spiders, the SPY. What I wanted to point out to you about this is that I mentioned this when Gareth was out of town, how we had these massive volume spikes right here. And I said that price is in essence controlled by these candles. Everything moving forward with these two big volume candles, everything is controlled. So since that time frame, we've seen the biggest volume candle on this green candle moving up. And then what's happened since then? We have a high end right here, and the low end right here. We've only had 2 days in which price is closed outside of this range. This day right here and this day right here. Beyond that, every one of the closes has transpired between this area. So that tells me this candle right now is in charge of the most immediate near term, but then this big red candle is influencing price to stay down. And if you look here, you've seen I've drawn trend lines. They're declining trend lines, and over the last couple trading days, we've made a move right up into this trend line, and that trend line falls back down. It's really easy to draw these trend lines. You can see all I've done is just taken a pivot high, connected to that pivot, and extended that trend line down, and then that helps me predict where price is going to have a tough time to get through and move on just a continual basis. So this is very much to be anticipated. What I do want to point out though is if price does move down lower, we have this major support trend line right here. That's likely going to be the next area of support. But the main thing, we've got to break this area. This area on the S&P 500 is going to be very significant for opening the door for further downside. All right, and the next chart, I've got the QQQ. And on the QQQ, what's important about this is very much what I mentioned before about the technical nature of charts, how they break down, how these trend lines interact with price. And you can see here, what did we have right here? Right here, we had price come up, break through this trend line right here. That's called a bull trap. After that breakout, you see this massive selling candle coming back down, getting support right here on the upsloping trend line. From that point, we went and retested the area we broke. Much like how I showed you what happened on the S&P 500 chart, how those areas that break get retested. So when price came back up into this area, price then had this as resistance, and then continued to fall back down lower, making a new low on the chart right here on the QQQ. After making the new low, what did we do? We went right back up, tested that trend line that was just broken, and now we're falling back down. So we haven't made a new lower low yet, but it's definitely on the watch. So keep an eye out for that on the QQQs. On the SMH, SMH is so important because what happens on the SMH likely leads to further moves on the Qs and further moves on the S&P 500. When the semis fail, you better bail, and that's for a reason. When you look at this chart on the SMH, this is the daily pattern. We have what's in essence is a move up here that is kind of like a little bull flag consolidation. All of this trading action right here was just all gaining momentum for a potential breakup. And what this bull flag actually did too is it provided us with a measured move. This measured move could take us all the way back up to the all-time highs of the SMH, which is our semiconductor ETF. Well, when price did go up, I had this resistance area at 262.11. Price went straight up into 262.11 and then has since reversed back down. What's so important about this though today is that price was trading back within this wedge. So that was almost, it was making an attempt, much like what we saw on the QQQ with a bull trap. This in essence could potentially be a bull trap for the time frame. However, we're still closing above this trend line. Once we close back within this wedge, that opens the door, increases the probabilities for price action to go down lower on the SMH. And should that happen, this area right here, this pivot made in the middle of December or middle of November, is going to be the major line in the sand to beat on the SMH. It's very important to pay attention to this because this, as I said, is going to help you determine the direction of how the markets are going to move in the future. So the next chart on the 10-year yield, this is one of the major reasons that the markets were reacting the way they were today. So when the jobs report was released, it was a weaker number than anticipated. Before that release, the 10-year yield was moving higher. And after that release, we had a dip down, but we didn't really fall that much. So the dip down, when the yields come down, the markets generally are going to start moving higher in this near term. And so when the markets were in the pre-market stage today, before that ADP jobs number, we were moving higher on the 10-year yield. And if you look over here, I've drawn a trend line right across on this chart. We were almost touching the highs placed in April of last year. So moving our yields back up, which is going to also cause interest rates to spike up and continue higher. The more the 10-year yield goes higher, the higher our interest rates are going to be, which is going to be tough on our economy, especially our government, for paying down some of the debt that we owe. Interest rates right now are putting our annual debt costs at over $1 trillion, a substantial amount to be paying that we just don't really get any sort of goods in return on. So important to watch this. And also, if you scroll back out on this chart, Lawton, you can see I have highlighted a head and shoulder pattern on the 10-year yield. This 10-year yield head and shoulder pattern is failing right now because it's breaking above this neckline. Should this pattern continue to fail and move up, more pressure is going to be put on the market. So watch out for that and pay attention to the 10-year yield. Next up, we've got the dollar. This dollar chart, and if you remember a couple weeks ago, I created this parallel channel to kind of give us insight as to where the dollar is going to go and what resistance levels are going to come next. The dollar, as we see today, it's having an up day, but notice this 50% area in the midway area of this parallel, this dotted line right here. I said this dotted line was going to be resistance. And sure enough, that's exactly what's happening. It looks like when prices come up into it, we've now retreated, and then price is now coming back up, getting through this 108.97 level on the charts. Should we proceed higher and the dollar continue to gain strength, next resistance level is going to be up at 111.52. But my guess, and I anticipate price to trail this dotted line for the coming days before potentially breaking higher if that next resistance level is going to be tagged. All right, so next up we have the gold chart. What's interesting about this, the dollar's going up, gold's going up too. Usually gold works a little bit inversely with the value of the dollar, but with the gold chart still staying positive today, that tells me it has relative strength. And most importantly, look at this trend line too. It's holding price up on the gold chart. As long as gold still trails this trend line and continues through it, we have a chance for gold to continue higher. However, this pattern that's developed on the gold chart does have a measured move down here to under $2,300, right around $2,300 and $2,360. So if we get down this low with gold, we could trade back within this parallel channel that's here at the bottom of the charts. But for now, gold is safe, although there is a bear flag pattern that's presenting itself on the charts. Next up, we've got the transports. This is so very important. Again, as I mentioned to you guys before, transports are how we receive most of our goods. There's airlines in there, there's FedEx, UPS, there's several other companies, but the most important reason for paying attention to transports is helping me understand how the economy is going to do. So as we've displayed before, this trend line has been holding down price on transports for the longest time, basically since 2022, for several years. So price in November peaked above, and this is on the weekly chart. Price peaked above in November, and then in December we got slammed back down. And then what's forming right here is, it's an immature, it's not completely formed yet, but it is a bull or bear flag. This bear flag has a measured move that takes the transports all the way down to 14,015.06. If this were to happen, our economy is certainly going to be in some tough shape, but that doesn't mean we're in a recession at this point, but it just means things aren't looking as good as we anticipated moving into 2025. So keep this trend line. It's very simple to draw, but keep this on your radar, draw it on your charts. It's going to give you insight as to which way the economy is going. All right. And next chart, we've got a few more to go over. Silver and gold are going to be a little bit quick just because not too much has happened today in silver. Silver is up slightly. That's great. It's still maintaining within this wedge. We have support underneath the wedge at 28.23, followed by 26.19. However, the biggest support is this long-term trend line that's coming in and registering right around $25. So keep a heads up for that. And then next on to Bitcoin. Bitcoin. This is a great pattern I really wanted to show you guys, and it really highlights what I'm going to talk about in Coinbase. But Bitcoin right here is having a head and shoulder pattern. So you can see this pattern displayed right here on the chart with this neckline drawn right here. This head and shoulder pattern, should it play out, has a major move down to $75,000. So if that were to happen, you've got to watch this trend line. This trend line is very pivotal for Bitcoin. We've now hit it several times, and especially today, coming in with good velocity into it. Right now, price is maintaining above it. So keep an eye on this area. Crypto could have a fall. However, there's always an opportunity for a rebound with crypto, and it is a very volatile sector. So heads up on the charts there. And at least for now, the probabilities are showing that we should go down on Bitcoin. All right, the next chart up we've got is Coinbase to follow up with Bitcoin. And Coinbase, it doesn't trade tick for tick, much like MSTR with Bitcoin, but whenever the crypto market is doing well and market caps are going up in crypto, Coinbase, you better believe, is going to be benefiting from it too. They get so many fees for every little transaction, whether it's a sell or a purchase, and they do very well. And as you can see here on the charts, what are we looking at? We're looking at the Coinbase weekly chart with a huge inverse head and shoulder pattern. It encompasses the entire length of this whole chart. All of the existence is an inverse head and shoulder pattern. And what we've seen happen over here, we finally broke up above this neckline and price has moved up, but what has it done? It's come right back into the trend line. Just as I've said with the spiders, with the Qs, this pattern, it repeats over and over and over. So should you be an individual investor and wanting to go long on any one of these positions, you find one of these patterns and it breaks the neckline, that's okay, and you miss the trade, don't worry about it. Oftentimes we're going to see price reverse right back down to that trend line. You're going to have an opportunity to buy it and go long at that point. Should price break this neckline and in essence negate the inverse head and shoulder pattern, the next level of support that we have on the Coinbase chart is going to come in right in here on this inclining trend line right around $200. So make sure to keep that on the radar too. It's going to be very important to watch, especially if you're trading any cryptocurrencies. All right, and the next chart up on Palantir. Palantir has been a big mover, gained over 100% in November. It's been a fantastic stock. It's really been riding the back of the momentum in the tech sector. And what the other day we had price break trend. You can see this trend line, simple trend line. Anybody can draw lines. I just connected these pivot lows all the way through on the daily chart. And once price did break, you'll notice this blue line that's coming up right here. That blue line is the 50-day simple moving average. And the reason I bring this to your attention is because whenever you have price move vertically down into this area, the 50 moving average, that area will provide good support. If price does come through it, come over to it, say it's gotten down here, it chops sideways, 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 and then hits the blue line, it's not going to react the same way. So when I saw this chart developing in the break right here, I saw the 50 moving average. This was going to be a great area for a bounce. Price did get within 50 cents of hitting that line, in essence kissed it, but didn't quite hit that line. So what this tells me is that we're likely probably going to start chopping sideways along this line. In essence, weakening the 50 moving average, opening the door for the possibility for price to move down lower into this trend line. And one more chart that I want to show you before I go into some of the cycles and some of the great things we're able to predict on the spiders and the S&P 500 is I want to show you this Rigetti chart. This was really the highlight of the day. Quantum computing got slammed today. All the momentum over the holidays has just been dumping money into all these different quantum stocks, whether they're ETFs, whether they're individual stocks like this with Rigetti, or whether they're even with Google. People were really jumping on board because they knew what happened in 2024 at the beginning of the year. AI just exploded. Nobody wants to miss a chance to make some good money. And so people were thinking quantum was going to do the same thing. Well, the leader at NVIDIA just popped that balloon, as I said earlier, when he announced quantum computing is 15 to 30 years out before anybody can really start using that. That's what we discussed here too 2 weeks ago. These services for these sort of chips, they're fantastic. They really are monumental, and they really can they be a game changer. However, they're just not available right now. So anybody interested in investing in this has to do so potentially for the long term, once these stocks are able to make some good money. So we see here on the charts, here's the daily pattern of Rigetti. We see here's the beginning of December. From the end of November to the highs, Rigetti moved up between 400 and 500% over the last month. Incredible move. And whenever you have a move like that, people may say, man, this is just out of control, moving up and down. But really, it's all technical. No matter what, no matter how you look at it, every one of these moves in the charts we can derive with technical analysis. So we see this movement up, and it's maintained within this parallel channel. And then when price did finally break this parallel channel, where did price stop when it was heading down? Now this was a violent sell. You can see this gap down lower, and then proceeded to sell all the way down to a low just under $10. And the reason it stopped right here was because of the Fibonacci retrace. I took a Fibonacci retrace level. Here you can see the one area right here, which is roughly about the $2 value on the chart. And then I have the top end of the Fibonacci channel right up here. The 618 is located right here, right at the value where price got support and got a nice pop. So it's very simple to do. Anybody can draw these Fibonacci retracements on their charts. They're so valuable to look into, to find right levels to trade. I highly recommend doing so whenever you're looking at charts like this and trying to make a profit. And then Lawton, if you could just flip back over to the S&P 500 or the SPX. I did want to point out about cycles. I skipped over this when we first started on it. Gareth has been talking about this in Trading the Close and Game Plan. I even talked about it in Trading the Close too. These cycles are so very important because they help us determine when the likelihood increases for change in direction in the market, or even change in market behavior. We've been banging the drum saying December 15th was going to be the start of the cycle, and how I got to those cycles was through a lot of mathematical calculation, but the main emphasis was on time. I figured out through time and studying WD Gann and all the patterns that present themselves on the charts, I was able to pinpoint down 3 different dates in December, close enough where they all coincided to almost give them more strength. And the biggest of those cycle dates was one that was going to be a lot of positive influence and a lot of negative influence. So almost like a heavyweight fighter, heavyweight blows back and forth, like Mike Tyson, Buster Douglas, just big blows. And that's exactly what we saw here. We have the cycle started right here, and then we had a big sell down, big move up, big sell down, big move up, and now we're coming down again. Are we going to bounce back up and hit into that trend line? We'll see, but it's important to note this cycle that we're currently in, it does expire January 14th. Or up to January 21st. There's a 7-day variance there. So we could be nearing the end of it and normal market trading will start to resume. The next cycle date comes up in April 14th. I'll have more info for you as those days approach, but wanted to throw that out there, and you can just see right now, all of this pattern was somewhat normal, and then things changed. And things changed because the cycle came, and we're amongst it right now.
Cool. All right, guys. Well, thank you so much, Drew, for all of that. I had some questions for you, but I think that you answered everything and more. So good job, Drew. All right, we're going to give Drew a break. We're going to say thank you really quick to our sponsor, Legacy Academy. Watch this video. Be right back. All right, hey guys, we're back with Legacy Academy. Taking a look here, I'm top 4% all time, and I only have 120 XP, so I'm ranked 7,632. So if I want to get all the way up to top 1,000, I got some work to do, but I assume, hopefully, once I do a little bit better, get more and more modules completed, I can see myself ranking higher. But top 4%, not bad so far, but again, we're shooting for that top 1,000. And you only get rewards if you're in the top 10, but you actually get legacy tokens that you can actually trade on the exchange. You earn as you learn. Thank you so much again to Legacy Academy for sponsoring us. With that being said, that's it for myself and Drew. You can follow Drew Dosick on Twitter at Drew Dosick and myself at Lawton Investing. Have a good day, guys. We'll see you later on Trading the Close.
Awesome. Thanks for joining us, guys. Look forward to seeing you next time.
See you later.